guys, welcome back to another episode of top down analysis. So in this episode I'm going to teach you guys how we actually broke this pair down from the weekly, daily, and then we took our entry in the 4-hour time frame. So we could see that the market pulled back to a major demand zone or a support zone, because you could see that when price came to this level, that was January 5th, there was a drastic move away. So this area became a major support zone, and then the market came to the same level, that was April 6, 2026, and there was a drastic move away. So we were waiting for the market to come to this level again, and then we would look for price action through candlestick pattern for a long setup. So now when price came to this level, we had bearish engulfing candle that we didn't like. It means that the sellers are gaining momentum. But one thing that we saw the subsequent week that we really liked was that the market gapped up. So the weekly candle closed at this level, but when the next session of the weekly when the next weekly session opened, you could see that price gap up and open at this level. So the gap, what does it mean when price gap up from a demand or from a supply zone? What it means is that there was overbought or oversold. So there is a demand zone. So buyers overbought the market. So that was why we had that gap up from the demand zone. So that gave us a bullish bias or a bullish sentiment. So, and one thing that we really like was that we had price action through candlestick patterns. What we had was inside bar. So you could see that the low and the high of this candle fit inside this particular candle. So the low and the high of this candle fit inside the low and the high of this candle. That gave us a bullish buy, that is inside bar. So let's move to the daily time frame for another bullish sentiment or a price action that tells us that buyers are actually stepping in inside the market at that particular support or demand zone. So when the market came to this support level in the daily time frame, what we saw was we had all red candle and then a green bullish candle appear. So from this level to this level, the sellers were in control. They were shorting the market. Now when we got to this zone, what we saw was that the buyers stepped inside drastically, and then it created the bullish engulfing candle. You could see that this candle is bigger than the previous candles. It was actually bigger than this candle, this candle, this candle, and this candle. So it shows a huge bullish presence from that particular support or the demand zone. Now one thing that we saw was that there was a gap up, which also shows price was overbought. So the weekly level or the weekly candle closed at this level, and then when the daily candle closed at this level, and then when the next daily candle opened, it gapped up and opened at this level, which shows overbought. So now we have weekly bullish sentiment, daily bullish sentiment through candle color change, gap up, and bullish engulfing candle. Now let's move to the 4-hour time frame for another bullish sentiment, so that we will look for our entries. Now when we come to 4-hour time frame, what do we see? One thing that you must see if you know chart pattern very well is double bottom, and then the market broke the neckline. We made a higher high here. So here is actually your entry. Now this is how we took the entry. So now we have double bottom showing a bullish sentiment. What we also saw was that we saw descending triangle. Descending triangle. So the descending triangle, we saw the descending triangle, and price broke the descending triangle with this huge bullish engulfing candle. So we took our entry over here and we targeted 1 to 3. Pretty simple. Yeah, so guys, so this is how we do proper top-down analysis. Now there was actually a continuation trade over here, but we didn't take the continuation trade. We still maintain our swing trade that we took when the price broke the descending triangle. So this was the continuation trade that we saw. So we could see the price started pulling back. We drew our counter trend line over here, and when the market broke, it came and retested the 50 EMA. So you can see all these doji candles rejecting the 50 EMA, followed by huge bullish engulfing candle that made a higher high. It means that we actually, so that is how it happened. Let me use the pattern. Lower low, lower high. It failed to make a lower low, and then boom, higher high, which shows a trend change. So we could have entered another position over here, but we really don't want to stack too many trades on this setup, so we just stayed out. But you see the trade played out nicely. Yeah, so guys, this is how we do proper top-down analysis. I hope my video has helped you to broaden your understanding when it comes to top-down analysis, swing trading, and then also time frames confluence. I'll see you guys in another video. Take care.